Hello, everyone. Welcome in a crisp fall day here on the Rancho in mid-October. Not surprisingly, Octobers have been traditionally the time for financial crises to come to the fore and the curtain to be drawn back and some viewpoint on what's really going on behind the scenes becomes apparent to more and more people, particularly those people that control large amounts of money. I want to talk about a Black Swan event involving the United Kingdom, and that's probably surprising because this is not one of the countries that we would have picked for any type of Black Swan event to occur, given its resources, its size, its standing within the world. But what is a Black Swan event? A Black Swan event is designed as an event that few people see coming, that has tremendous impact on society that few people imagined. And what's been unfolding in the United Kingdom is a potential crisis of mega proportions, because what's unusual this time is the United Kingdom is in a position where their hands begin to be tied in what they can effectively do to quell the fires that are burning in the way of interest rates and other public spending and deficit spending. They may be the first nation that's really facing the brick wall at the end of the highway that says no mas when it comes to borrowed money and engineered prosperity. If you look at this chart of yields of the United States 10-year bond over the last 40 years, you will see that interest rates trended downward in a pretty doggone straight channel. From about 1982 to mid-2022, when interest rates dropped from about 18% all the way down to 0.75%. And now we sit over 4% on that 10-year. Well, we can see that this year it's also occurred in the UK with the very sharp rise in interest rates since the beginning of the year. They were about 0.75% on the 10-year, and look at it now, bouncing around 4%. That is a huge increase. And does it all have to do with inflation? Well, many people up to this point in time said yes. But you can see by this quote from the paper here that the impact of that rise in interest rates has had a dramatic effect, that was through July or whatever, of quadrupling the amount of monies on an annual budget basis that have to be directed towards servicing debt. And I can assure you, interest rates are much higher now, so you're looking at a much higher magnitude of impact on the budget. And a few people are starting to look beyond inflation now because they see some key components of it, like energy and other things, have come down. Housing starting to be impacted. The labor market is starting to soften. Some of the traditional markers that would indicate that the recession is taking hold. And by the way, UK has been in a recession for some time. So Prime Minister Truss, who came in, decided to unveil a plan that would cut taxes and spending would be unaltered. And people threw up their hands and say, oh man, it just never ends. It's going to further compound the debt holdings of the United Kingdom for some hope for supply side economic situation where you cut taxes, put more money into people's hands, and the economy grows as a result. We don't hear much about supply side economics anymore, because it's great when times are rough to increase public spending, but it doesn't work real well when times are good and governments don't claw back those excess monies that come in. And it's why Keynesian economics has been such a failure, because you're supposed to raise taxes in good times and lower them in bad times, but we don't see that because we don't have the give back when times are good in terms of clawing back money. But let's get back to this Black Swan event. Could the United Kingdom be the first country in the world, major industrialized and advanced nation, that is now facing the debt crisis The demands on the Treasury are such, especially with helping out in Ukraine and the cost of living and pushing up payments to people from the Treasury, funding refugees, and being involved in all manner of defense spending, as well as spending at home, a huge national health service. All these things take a tremendous amount of money. And they don't tend to go down. The demands for funding increase, especially in times where we've had transitional inflationary pressure like we're having right now. On the other hand, being in a recession means that receipts to the Treasury are going down in the UK, as they will shortly here in the United States. So what's made it particularly unstable is the realization that, and I've talked about this months ago, when more and more very important money managers finally get it into their head that the amounts of debt being held worldwide are now imperiling financial systems, they will start to make moves to protect themselves and their constituency as much as they're able to by doing things like selling bonds and staying away from government auctions, which they're doing in droves in the United Kingdom and worldwide. Big money moves, and big money knows that the pressure on interest rates is up and up and up and up, because as the recessionary impact hits worldwide, the need for spending goes up, the need for borrowing, and it becomes like a vicious cycle. So what has now become what seems to be a Black Swan event is England and the United Kingdom are now under the microscope in terms of what the outcome is going to be. And a lot of people that control a lot amount of money are not waiting around to see how it all ends up in the end. They're voting with their feet. They're getting their assets out of the United Kingdom. They're getting their money out. They're selling their pounds and getting into dollar. And they're selling their debt, which is causing interest rates to soar in the UK. Now, what really compounds the problem is we had a new prime minister who hasn't even been in office for, 60 days or whatever. And her overseeing of the United Kingdom has been nothing short of a disaster. She fired Exchequer Chancellor of the Treasury after 38 days, which is the second shortest tenure of a Treasury Secretary in the United Kingdom. And it just points up how unstable and rocking out of control things are at the highest level of government in the UK, which creates this Black Swan event, which can potentially feed on itself and cause people to start looking at levels of debt in other locations. And for the first time, we're seeing in newspapers, as you see here, people putting in black and white in the papers and things, the first inkling that it might be a debt crisis here that's coming up. We've talked about this on this channel for a long time, that the aggregate levels of public debt, once interest rates turn, could be sharp, fierce, and the effects could be dramatic, especially in terms of slowing an economy, which we see now. The Prime Minister turned around today and totally reversed course and said, okay, we'll have a big budget gap here, so I'm going to go back and we're going to raise interest rates on corporations. Well, people know that raising interest rates on corporations is going to further damage the chances for economic recovery. It's going to further limit the amount of funds that are available for investment. And it's a lack of a realization that corporations are what drives the world and drives profitability, drives standard of living and things like that. You start gutting corporations and the effects are widespread. They're not immediately known because to the average person, a corporation is just some body. It's not a human being, but it's some entity that we can just tax into oblivion and tax when we need to without ramifications. Such is not the case. Such is not the case at all. She further went on to fire her 38-day reign Treasury of the Exchequer and appoint a new and totally reverse policies. reversing things in such a short period of time and so dramatically makes people that are thinkers and people that manage money is this is this is really, we can't even predict what's coming next. And when unpredictability is lost in financial markets in particular, people's tolerance goes way down to manage large amounts of money because they want long-term assurance that they and their holders' money is going to come out okay. But when they see whipping from one side of the ship to the other side of the ship and people being fired, really, it really is like shit. From one side of the ship to the other side of the ship, it's not something that's going to vest a lot of confidence in the situation. And it's probably going to lead to a case where the Prime Minister, her tenure is probably going to be very short-lived. Are the pressures on interest rates going to ease? Well, I've told people in my chats, and I hope you join me on weekdays afternoons, part of the live streams. We have fun later. But we talk about serious events. And I've consistently told people, in my opinion, that the trend continues onward of rising interest rates because it starts to become like a snowball gathering speed as it goes downhill. It starts to pull more and more nations in. As more and more money managers start to think about the implications of rising interest rates and the ability to cover off these huge budget deficits and total indebtedness. These low interest rates for year in, year after year out created a situation of almost zero moral hazard where governments and people thought that they could borrow indefinitely, whether to buy homes at overinflated prices or governments to go ahead and fund new programs because the interest rates are low and the cost is very low. Well, we see that these have to be funded on an ongoing basis. And most of the funding is done on a very short-term basis. The 1 year, the 5 year, the 2 year notes, the 30, 60, 90-day equivalent treasuries. That's the really sensitive area. That's the area where people were pulling back and saying, no, I think we're just going to sit this auction out here. And looks like the trend of interest rates is going up. Well, the damage, we're not equipped to deal with interest rates that even hit 4% on a 10-year. What would the economy be if we hit 7%, 10%, 14%? God forbid, back in 1980 when we hit 16, 17% on interest rates and a prime rate almost 20%. You can't, the effects would be horrifying, and yet we're in a situation where we don't know how high interest rates are going to go. A lot of people assume, probably wrongly, that as things slow down, the interest rates will drop accordingly to naturally stimulate economic activity. But the Black Swan event is, if money managers and people that move a lot of money get the idea in their head that levels of overall indebtedness in nations are now the new prime focus of the world, well, I don't have to tell you what the outcome would be. This is the result of years of overspending and engineered prosperity, and it may have finally hit the end of the road. We shall see. Perhaps we come out of this smelling like a rose, but as we sit here in mid-October, every day seems to be bringing new instability and new challenges to world financial markets. I wouldn't be surprised in the next couple of weeks if there's a conference called amongst leaders of G7 and other nations to kind of get to the bottom. What's really going on here? Well, if you follow this channel, you know exactly what's going on. I do suggest that you give me a like and follow here. These are events and happenings that are going to have an impact on your life coming up. And forewarned is forearmed. The socio-economic influence, the effect on societies is going to be profound, and instability is going to be the watchword of the future. You want to be here we've seen things coming down the pike, and I've seen it with pretty much of a clear crystal ball here, and it's been pretty much spot on. So I encourage you to hit that subscribe button, the bell for all notification, and enjoy some of the other activities here on the channel too. Live streaming, adventures, vintage audio, as you see behind me, metal detecting, and travel and other fun things, sports betting. So thank you for being a part of the program today. Your thumbs up are appreciated. Once again, subscribe, hit that bell for all notifications, and thanks so much for watching.